Good evening and welcome to the Strategy of the Week for Friday, November 22nd, 2013. My name is Brian D'Amico, Manager of Educational Services here at VectorVest, and it's my pleasure to present your strategy this evening titled The Dividend Investor's Toolbox. Our founder, Dr. Bart DeLito, wrote about the importance of dividend investing in his book, Stock Strategies and Common Sense. In that book, he said, studies have shown that undervalued stocks with solid dividends hold up best in down markets. Over the long term, dividends account for over 40% of the profits made in the stock market. Shrewd investors know that reinvesting dividends is the surest way to accumulate wealth in the long run. The best of all worlds, collecting dividend checks while prices of your stocks go up, comes from finding solid growth stocks that pay dividends. And VectorVest is ideally suited to find these babies. Last week, our Canadian consultant, Stan Heller, presented a webcast dedicated to dividend investing. I provided a link to that webcast in the views tonight, and I highly recommend you spend time to watch that recording. VectorVest provides several important tools for dividend investors to help you create wealth. The first of these is the Stock Viewer. And the Stock Viewer provides several key proprietary indicators to analyze a stock and its dividend. Among those are VST, which is our master indicator looking at a stock's value, safety, and timing, dividend yield, dividend safety, dividend growth, and YSG, which is our master indicator which combines dividend yield, dividend safety, and dividend growth into a single indicator. The second tool we'll look at is the watch list section. VectorVest has several watch lists which organize dividend-paying stocks in one place and ranks them for you. These lists have great companies that pay a nice dividend. The final tool we'll look at tonight is the Unisearch tool. This tool is an extremely powerful search tool, which is also easy to use. We'll see tonight how you can quickly find dividend-paying stocks that meet your desired criteria. And those three tools set the stage for tonight's agenda. So let's get started and head right over to the Stock Viewer. Here we are in VectorVest 7, and I've already opened up our Stock Viewer. In the Stock Viewer, you can see that we're tracking just under 3,500 stocks right now. And these stocks are sorted by our master indicator, VST, which means the stocks with the best combination of value, safety, and timing will be at the top of this list. As a dividend investor, you'll also want to look at the columns which are over to the right a little bit more. So I'll scroll over a little bit. First, you see that we come to our earnings indicators, and as I continue to scroll over a little bit more, that's where we come to our dividend indicators. The first column is the DIV, or the dividend column, and that lets you know what the annual dividend is. And here you can see that the first few stocks in the Stock Viewer do not pay a dividend. Now, once you get down to the stock here, Stantec, you can see that it does pay a dividend of 66 cents per share, and to the right of that, it shows what the dividend yield is. So you can see the dividend yield is just under 1%. Now, knowing the dividend yield is one thing, but you want to know how safe that dividend is. Having a high yield means nothing if there's a good chance you may never see that dividend. So we calculate a dividend safety rating on a scale of 0 to 99. And here you can see that Stantec has the highest rating of 99, which makes sense because the dividend makes up a small percentage of the earnings. So it should be likely to be able to continue paying that dividend of 66 cents. Whereas if we look at companies like Altus and down here at Chesswood, we can see dividend safety ratings much lower. And in fact, if you look over at the next column, which is dividend growth, you can see here that Altus actually has a negative dividend growth rating. You want to invest in companies that grow their dividend, not cut the dividend. If a company grows their dividend, it typically means they're making more money, and that's a good thing. Now, this Stock Viewer is also great because you can sort by any of the column headings you see up here at the top. So if you wanted to see the companies with the highest dividend yield, all you have to do is simply click right here where it says DY, and it resorts the entire list. Now I'm going to scroll back over to the dividend columns. And here you can see some mouth-watering dividend yields, right? But look at what you have here in the dividend safety column. You've got very low and sometimes ratings of 0. So how can we get the best combination here of yield, safety, and growth? Well, your first step can be to look at this column to the right, which is YSG. It combines dividend yield, dividend safety, and dividend growth into one single master indicator. It's like the VST for dividends. When I click on that column heading, it resorts the list by YSG, and you'll notice we don't have as many sell recommendations here. And if I scroll over to the right, we can see we've got some better numbers in here. You got some dividend growth rates that are very respectable, but we still have some of the stocks showing some not so hot fundamentals. You can see the relative safety ratings are low. Here we got a couple of relative values that are low, and we still have a bunch of sell recommendations here at the top. I mean, if you're getting a 4% yield on a dividend, that means little if the stock has a likelihood of dropping 10 to 15% in price. In that case, perhaps the best thing you can do is sort the list by a combination of VST and YSG. And to do that, all you have to do is come up to the top here, come down to the primary sort, and it's almost the last item in the list, VST plus YSG, and then click OK. And once you do that, notice what we have here at the top. And I'm actually going to shrink this left-hand side a little bit. Look at what we have here at the top. First off, you can see a lot of buy recommendations. Look at the relative values, the relative safeties. The stocks are in an uptrend. And if I scroll over to the right, back to the dividend information, you've got some nice yields in here and some very high dividend safety ratings and dividend growth. This sort of VST plus YSG is the most popular sort dividend investors use. Let's do this. Let's take this list back and let's see what the top stocks by VST and YSG were on December 31st. And let's just quick test the top 10 of these stocks and see how they've done since the beginning of the year. Wow, look at this. We had 7 out of the 10 go up. On average, they went up 32%. And this is just capital appreciation compared to the overall market, which was just under 7%. In addition, these stocks, on average, were paying between 3 and 4% in dividend yield. And that's the type of power you get when you combine VST and YSG. Now, the Stock Viewer is a great place to start. The next tool for you is a fantastic place to go next, and it's our watch list section. So if I open up the left-hand panel and we come to the watch list area, down here in the list of folders, we have a folder called Special Watch List. And when I open that up, there are 3 watch lists I want you to pay specific attention to. First is this one right here called Monthly Dividend Payers. We currently track over 400 stocks that pay a dividend to you every single month. Think about that. You don't have to wait until a quarter goes by until you get your next paycheck. And you look down here at this bottom row. This is the average of the stocks in this watch list. And you can see here the average dividend yield of these stocks is 5.29%. So not only are you getting paid monthly, but you're receiving a very nice yield in addition to that. Now below this monthly dividend payers watch list, we have a watch list called WOW Dividends. And the WOW stands for Watch List of Watch Lists. And you can see down here by this description that this watch list is made up of dividend-paying stocks that are currently being recommended by popular newsletters, magazines, and television commentators. Now, you have the extra benefit of taking these popular stocks and then having them ranked by our master indicator, VST. Now, below this watch list, we have another WOW watch list. Now, this one focuses on value and growth. Now, while this watch list focuses mostly on the stocks that are recommended for their capital appreciation potential, you're going to notice that they also pay a dividend. So if I scroll over to the right, you can see that many of them do pay a dividend, and on average, the yield is 2.39%. So let's see how the top stocks in each of these 3 watch lists have done this year. So let's start with the first one we looked at, monthly dividend payers. I'm going to go back in time, so I'm going to go back to the beginning of the year. So I'll choose December 31st, and let's shrink the left-hand side. And I'm going to quick test the top 10 stocks. And take a look at this. We've got 6 out of the 10 going up. And look at this average, 23% on average. And in addition, the dividend yield of these 10 stocks was around 5%. So you're getting some nice capital appreciation and a monthly dividend here. Let's check out the next watch list. So I'll close that. The next one was Wow Dividends. And let's quick test the top 10 of these. All right, wow, this is even better. Look at this. 9 out of 10 going up. Look at these percentage gains here. On average, up 33%. And the yield on these stocks was around 3%. And if we look at the last watch list, which remember, this last one here does focus more on the capital appreciation side. If we quick test the top 10 in this list, let's see, we've got 9 out of 10 going up. On average, 43% gain. Now keep in mind, these, you're not getting as high a dividend. You're averaging around a 1% dividend, maybe 1.5%, but you make up for that with the capital appreciation side. So we provide 3 great watch lists for you to have stocks to consider for their dividend. All right, and you can see the difference. With the value and growth watch list, you get more capital appreciation potential with less dividend. The monthly dividend payers watch list, you get less capital appreciation, but you're getting that constant paycheck. Now, what if you knew exactly what criteria you wanted in a stock? Perhaps you wanted the yield to be over a certain percentage, or you want the volume to be a certain amount. In that case, you're going to head over to our third tool, which is the Unisearch tool. So I'm going to click on that tab at the top, and here in the Unisearch, we've categorized all of the searches for you. And as a dividend investor, you will want to focus your attention on the searches here in the conservative folder and down here in the retirement folder. For example, when I open up the conservative folder, you can see most of these are focusing on dividends. And we got this great little search in here called Steady Eddy. So I'm going to click on that one. Now let's look at the criteria of this search. Here we can see that this search only looks at stocks that do pay a dividend, and the relative safety rating has to be over 1.25. That means that the company's financial performance is very good. In addition, the stocks will be sorted by that combination of VST plus YSG that we talked about earlier. So let's run this search from the beginning of the year. So I'm going to change our date. Let's once again go back to December 31st and see how this one compares. And let's hit quick test the top 10. All right, look at this, 32%, 8 winners, only 2 losers. If I move this back over, let's move this over and let's take a look at some of these fundamentals. Look at this. Look at these high RV ratings, high RS ratings. And if I scroll over to the right a little bit more, we can see the dividends. Look, we're getting a yield on average between 1 and 2%. But look at these safety ratings. You know those dividends are not going anywhere. Now let's close this quick test and let me show you a few of the other searches that I really think you should focus in on. They're right here in this retirement folder. The first one here is Don's Dividend Dandies. This search looks for stocks that have increased their dividend yield over the past quarter, and they currently have a buy recommendation. So if you think about that, the stocks have been going up in price, which is the only way that they could get a buy recommendation. That being the case, for the dividend yield to have increased, that would mean that the dividend would have had to rise as well. So let's run this search here. Notice it's a very strict search. We only got 4 stocks getting returned. Now this one uses a different sort. It's combining dividend yield and earnings yield, so a great combination of those two. And let's quick test these 4 stocks. Oh, we had 3 out of the 4 go up, on average 14%. And the dividend yield of these stocks, you can see here, 3.5, 2.5, 1.5, 5.3. So some nice yields there as well. One of our most favorite searches is this one right here. High VST plus YSG stocks. It uses that popular sort again, VST plus YSG, and it makes sure that not only is the VST over 1, but the YSG is over 1, the relative safety is over 1, and the earnings growth rate is over 10%. So you're getting some fundamentally sound companies from this search. So if we run this one, you can see here some dividend yields, about 1.5% on average. And if we quick test these guys, look at this, 45%, 9 winners, 1 loser. And add to that, maybe 1 to 2% in dividends. So you can see why we really like this search. Now there's a search that is almost identical to that search, and it's down here at the bottom, VST plus YSG bottom fishers. The criteria is exactly the same, but you notice we sort it a little differently. If I run this search, what we're doing is we're taking the stocks and sorting them by their relative timing ascending, so lowest to highest. In other words, it's looking for dividend-paying stocks that have good fundamentals, but these stocks had gotten beaten down. All right, so look at these fundamentals, high RVs, high RSs, but they just have been beaten down. They're a little out of favor right now, but they still pay a dividend. So if we quick test these for the course of the year, that 9 out of 10 went up, almost 23% gain, and you add to that a nice dividend. Now the last search to look at tonight is right here, Smooth and Steady MDPs, and that MDP stands for Monthly Dividend Payers. So this search, as you can see here by this line right here, it only looks at stocks that are in that watch list, monthly dividend payers. They have to have a dividend yield over 3%. And the criteria that makes them smooth and steady would be this CI rating right here. CI is on a scale of 0 to 2, and anytime it's over 1, the stocks have very good price growth persistence. All right, and we're sorting it by stocks that are in a nice uptrend and have nice price growth persistence. So the best combination of those two. So if we run this search and quick test it, look at that 29% gain plus your dividend, and you had 7 out of 10 winners. All right, so let's close this quick test. Now, as a dividend investor, you would typically manage your stocks a little more loosely. So let's look at some tips on stop losses. The stop loss tip for you tonight is to consider wider stops so you can capture that dividend. Because typically what you're going to be looking at are some very fundamentally sound companies using those watch lists and the searches that we looked at. So you can give them a little bit more room. One of our most popular stop losses is actually to wait for the VST to go below 1. Other things that you could consider would be if the recommendation turns to a sell, you might want to use a trailing stop of, let's say, 25%, or you can use some longer-term moving averages, maybe like a 40-day or a 50-day. Of course, your stops will depend on you and your investment style. Tonight, I hope you saw ways to use the stock viewer, watch list, and Unisearch as tools for your dividend investor's toolbox. If you'd like more information on this topic, I did place a link in the views tonight to the webcast Stan Heller presented last week. Additionally, Stan will be hosting the weekly Q&A session, which we hold through a live webcast on Monday at 11 a.m. Eastern Time. During that webcast, you can ask any question that you have related to tonight's strategy, or even his webcast from last week. I hope you all have a great weekend, and we look forward to having you back next week at the VectorVest University. Good night, everyone.